What's going on, guys? Let's kind of take a look at the triple Qs. Let's see exactly what's on the options chain, kind of see what we're working with here. So we closed at 339.45 on the Qs. We gave back 300 points that we kind of gapped up from the pre-market here. So not good. Anytime you're up 300 points to start the day and you completely reverse and actually give back more than that. You can see here, this is a second day building under the 50-day moving average. We do have the 5-day moving average sloping down. So on that little rally, we got stuffed at the supply zone here. I kind of told everyone in Discord, be careful in the morning, just due to the fact that anytime we have such a significant run up or a significant flush, look for that stuff into supply. We got stuffed, we rolled over, we took out yesterday's lows, and we're kind of sitting down here at this lower Bollinger Band. So now we're kind of just floating in space. Truthfully be told, the market looks like it wants to go lower. That's not to say that we cannot get some sort of relief bounce back into the 348 or even 350 zone. Those would be the two areas I would look for if we do get some sort of little dead cat bounce. But if we kind of just go to the heat map here, we have nothing sitting on the call side. I mean, $4 million when we're talking about the index of the triple Qs is nothing. And that's not even for 2 more months. So we got 350 strikes 2 months out on expiration, $4 million. We have some expirations for next month at 340, $2.6 million, which is nothing. This month, all we've got sitting there is a 357 strike, only $1 million worth of premium. So what's holding us down here and what needs to happen is a lot of this options on the put side needs to start coming off the books. So these guys who are holding these 355 puts, $18, this is only one order here. So this could be a some sort of fund. It can be some sort of bank, some sort of big, heavy, major player here. But what he has, or they have, right, is a 520 2022 355 put for 18 million. This is what's holding down the market, okay, from the option side of things. This $18 million ceiling here is holding down the market. And if we kind of just go to that 355 zone, that was realistically once we started to crack below the 200-day moving average. So that's why I kind of tell you guys, as soon as we lose the 200, as soon as we lose the 50, as soon as we reclaim the 50, reclaim the 200, that's when you want to get long. That's when you want to swing. That's when you want to, put on longer trades. So that 355 put has probably been sitting here since we lost this floor. Once we lost the 200-day moving average, it's been a 1, 2, 3, 4, 5 aggressive days cycle down. So you can only imagine on the $18 million worth of premium, how much they are up, being down, just about, 11 or actually 15 points in the money on those. What we also have, 413. So this is going to be tomorrow's expiration. We have 347 puts. These are already in the money. You would expect these to get cleared off of the board. 520, I don't really want to look at that. It's a little bit too far out. 422, 340 puts for 2 million. So you can just see the extensive puts that we have here. I'm trying to look for things that expire this week. 414, 340 strikes. Tomorrow, 340 strikes. So it looks like a lot at 340. We've got a ton at 340. So if we kind of look at 340, those are all getting paid and going into the money today. So I would expect those to come off of the books tomorrow, especially if we have some sort of washout tomorrow. I would expect the 340s that are going to expire tomorrow to start coming off the books if they did not come off the books today at close. So I will check the options flow tomorrow and kind of see, did those come off the table? If those came off the table, we could expect maybe, heading into Thursday, a little bit of a bounce towards the later half of tomorrow and into Thursday. We could get that little bit of a relief bounce, and I see a relief bounce going back to 347, but ultimately kind of staying under the 350 zone. If there is a chance that this week we do reclaim the 50-day moving average, expect the bounce, just about another dollar there. But yeah, I would imagine that either we gap down tomorrow, or even if we do have some sort of flat open, on that initial washout, all of those puts will come off, and that's when I think the bounce will start. just because due to the fact that those options are going to expire tomorrow on those. But you know, we still have the big ones that are kind of sitting out there. This guy here, this 355 guy, as soon as this guy comes off the table here, I would expect a little bit of a relief bounce in the overall markets. I hope that helps. Kind of interesting. Just wanted to kind of show you guys exactly what's going on here. You know, there's just a lot of other data. So if you guys have like an option scanner, you guys can kind of pick up this data. Definitely when you're trading options, you know, if something's ready to break out of a level and you guys can kind of follow along with what options flow is coming through live in real time, then it kind of helps, right? But the overall sentiment on the triple Qs is bearish. The call to put ratio is 0.30. The net premiums is minus 7.37 million. So with that being said, enjoy the video. Hope you guys all made some money today. If you didn't, we'll get it back tomorrow. If you guys are watching on YouTube, make sure to subscribe, like, comment, join the Discord. I'll see you guys all later.